David Caseley. Catch the bull by the horns. Fast Market Insights.
In Istanbul, a soccer match came to an unexpected stop, not for an injured player, but a seagull. After the bird was struck by a ball, one of the players rushed over and gently performed CPR, successfully reviving it, and the crowd went absolutely wild. It was a far happier ending than the famous Randy Johnson bird incident, which occurred during a spring training game on March 24th, 2001, when a fastball he threw, boom, exploded a dove mid-flight. And yes, you can catch that moment on YouTube. Here's your market in a minute or two for the week ending Friday, February 27th. At home, after reaching a new all-time high yesterday, the TSX is experiencing a modest pullback today, but remains up over 1% for the week. The softness follows weaker than expected Canadian GDP, with Q4 contracting 0.6%, pressuring market sentiment. Tech and financials led declines, while utilities and communications provided pockets of stability. Rising oil and gold prices continued to support energy and mining stocks. In the United States, the S&P 500 finished slightly lower, down less than 1% for the week, as investors navigated a mix of macroeconomic and geopolitical developments. A key tailwind early on was the U.S. Supreme Court striking down broad tariff policies, while momentum was tempered by economic releases. Inflation surprised to the upside at 2.9%, and Q4 GDP slowed to 1.4%, missing expectations. Eurozone equities delivered a steady week with modest gains, supported by strength across industrials and luxury names, reflecting the resilience of the region's blue chip leaders. Oil ended the week essentially flat, up 20 cents to 66.62, after early week price spikes driven by U.S.-Iran tensions, followed by a slight pullback as diplomacy advanced. Gold surged over $160 an ounce to $52.47, supported by safe haven demand amid geopolitical uncertainty and hotter than expected U.S. inflation. Global markets over the next 5 to 10 days are expected to remain volatile but range-bound, shaped by U.S. tech softness, elevated volatilities levels, shifting global bond yields, and sustained geopolitical tension around Iran. The key risks to watch: U.S.-Iran geopolitical tensions continue to influence gold markets, oil markets, and broader risk sentiment. Any breakdown could trigger renewed volatility. Hotter than expected U.S. inflation and softer GDP questions around the Fed policy, pressuring both equity and credit markets. That's your market in a minute or two. So stay bullish, stay curious, and especially you, Jocelyn, watch for stampedes.